What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Apple stock, ticker symbol AAPL, on a variety of time frames in anticipation of the next trading day, Monday, February 26th. Well, Apple stock on Friday finished the day down $1.85 a share, about 1% on the day. We had this move to the upside in pre-market. Look at the 5-minute just really quickly. We had this move upside in pre-market, and then we, of course, faded for really the majority of the rest of the day here, consolidating into the close. The stock is down just slightly, about 24 cents a share after hours. Listen, as always, if you guys watch these videos commonly, you'll hear me say this a lot. Take after hours movement with a grain of salt. It's really, really important to do that because volume is so incredibly low after hours, right? That it becomes extremely easy, even a stock like Apple with a ridiculous market cap. For a fund or an institution with a lot of money, if they're taking positions or taking profits, whatever it may be, in the after hours, it's incredibly simple to push a stock around when volume is that low and it's so thinly traded. If you look at a level 2 box after hours, it thins out like crazy, like you wouldn't believe. Very easy to move around. So whether it's in your favor or going against you, take after hours with a grain of salt. Let's start here on Apple on the 1-minute chart. First of all, if you guys like me covering Apple, I'm happy to cover Apple every single day and add it into the rotation. It's a stock that I like to talk about a lot, but I want to make sure that you guys are interested in seeing that at all. If you want to see me cover Apple every day, let me know in the comments. Please subscribe to the channel if that's the case. And that feedback helps out tremendously. So I appreciate that. Let's jump in. What I'm doing here is I'm zooming in a little bit on the 1-minute chart because this video is, of course, directed at looking at Apple on a day-to-day perspective as we head into Monday's trading day. But I'm a scalper at heart. Scalping intraday is what I do every day. So what I want to do to start is just very briefly take a look at any opportunities that presented themselves on Friday that we can look to potentially replicate come Monday. Apple is a stock that it's interesting because I will only scalp it if it is either in play, which is rare for any, 99% of stocks every day are not in play, meaning they don't have significant edge for retail traders. But I most often find myself scalping Apple if it presents one of the setups. They're very minimal, at least in my playbook, and I think you'll find this with most intraday traders, that does not require the stock to be in play necessarily because it has so much edge on its own if the setup presents itself in a clean manner on any stock with enough liquidity. One of those stocks is a setup I developed, call it the repeat offender setup, and it looks something like this. You get this bounce setup here forming. However, this one was a little bit sloppy on Apple. The volatility was tight. It was in a very clear, tight downtrend here in the first half of the day. So unfortunately, well, for me, not really for Apple, this is kind of indifferent for the stock itself, for the company. But I wasn't able to take any scalps on Apple on Friday. But just so you guys know, talking through, that is what I'm always looking for on Apple in particular. Little setups like that can help, generate some revenue around what would be a core position. So let's move on now from the intraday mentality. By the way, if you guys want to get those scalp, I alert my personal scalp setup alerts every single day. I also alert my human verified. I track them myself. Unusual options activity, and we have a few platinum one-on-one spots left. If you want to take a look at that, it's that first link in the pinned comments. So here on the 5-minute chart, you guys know what I'm typically looking for. I'm looking for clear changes in volume that correlate to an incredibly obvious change in stock price. What I mean by that is, like, for example, if we had a big dump off in the stock, bears, what the bears would really be looking for is really a ton of volume on that dump off, and then on any bounces, they would want as little volume as possible. We're always looking for as much volume in the direction that our bias is as possible, and as little against us as possible. So for example, bulls, on any moves to the upside, you'd want to see as much volume as we possibly could, and then on downside moves, as little as possible. Okay, so let's take a look here. Now, contextually, right? We always expect big volume off the open. That is not surprising. But what's interesting on Apple here today is we saw big volume heading into the close, And then on this kind of neutral candle with big wicks in either direction. And by the way, this closing candle, that red candle, yes, the volume is elevated, which we expect heading into the close to begin with, but also it has this big bottoming wick, which tells me that a lot of buyers were actually contributing to that, likely hitting the offer, which beefed up that volume. So you have to consider that as well. This big candle on the first 5-minute candle after the closing bell, yes, bulls, it happened to be a green candle. However, we need to consider that it was just barely a green candle. It was essentially a neutral candle. So honestly, guys, when I'm looking at this 5-minute, for me, it would be kind of a force to pull anything out of this, to be completely honest with you. So let's move on to the 30-minute where things start to get really, really contextual and a lot more simple to read, because what we're looking at are the self-fulfilling prophecy, very, very important levels psychologically that everybody's paying attention to. So what we do is we look at the 30-minute chart, the 4-hour chart, and the daily chart, and we say, okay, what has the most eyeballs? Well, I mean, it's clear to me, the 50 period and the 200 period moving averages across those three charts. So that's what I want to look at. So bulls, from a bullish perspective, here on Apple come Monday on the 30-minute, what I would be looking for is really a reclaim, ideally, of at least that 200 period, that gray line, which is about just under 0.25% away. But, I mean, the ultimate goal really is to reclaim that 50 period here on the 30-minute chart. Get above it, retest it, reclaim it as support, and then push up out of that hole higher, okay? And again, that 50 period is really only about 0.63% away to the upside, which is well within a one-day move on Apple, given its expected volatility, or ATR, average true range. Bears, really simple for you. What you'd want to see is if we see a test at all of the 200 period, you'd just want to see a hard rejection off of that and a fade continuing downside. Moving on to the 4-hour here, you can take a look. The really the most in play indication or indicator, technical level, psychological level, right? It's all, to me, just a self-fulfilling prophecy, nothing more, nothing less. And that's exactly how I want it, right? So we have this white line, the 50 period. That is the most in play thing here on the 4-hour. That is approximately 1.07% away to the upside. So bulls, we rejected off that the last 2 trading days. So ideally, bulls, really on the 4-hour, ultimate goal is to reclaim that 50 period at least as a support level. Get back above, retest it, claim it as support. Bears, you don't really want to see an upside test, because that would mean that your position's going at least 1% against you. But if we do, obviously a hard rejection, have that 50 period moving average continue downside, acting as an additional psychological barrier as the stock, as it can potentially help the stock push down further, again, from a psychological perspective with market participants. Now, the most important chart of all is going to be the daily. And this is one of the most watched charts in the world. The daily on Apple, right, with the 200-day moving average and the 50-day moving average. Currently, we find ourselves right around the 200-day moving average. And when the story on the daily, which has so many eyeballs, is so heavily watched, we don't overcomplicate it, right? You can't overcomplicate it, because all you do is lose eyeballs, and then it becomes less and less of a self-fulfilling prophecy. And that's not what we're after here. So it's simple. Don't overcomplicate it. Bulls, ideally, reclaim the 200-day moving average and get up through 185, which has been acting as somewhat of a psychological resistance in the last couple of trading days. Bears, any retest of the 200, hard rejection, fade downside, because we're looking really to get down through 180 if you're a bear here on Apple. Let's finish up here by taking a look at the bias in the options chain. This is Friday. Only from Friday, all day Friday, 866,000 total contracts traded. 538,000 of those were calls. 327,000 of those were puts. So we are seeing an overall call bias on the overall call put ratio. Short-term speculation, the speculators, right, in the short term, the 0 to 20 delta range, you have 226,000 calls and just 161,000 puts. So I wouldn't say that that's an overwhelming ratio, but on a stock with as much activity as Apple, it's a relatively heavy ratio on both the overall and the short-term speculators, right? That bias as well. As you look down here, you go down to each delta range. Each additional delta range again represents a call side bias. So you can see here that's kind of like out of the money, right? At the money and in the money. On average, shorter term sentiment, midterm, and more long term. Okay? All of it leaning with a call side bias on Friday. But listen, if you're going to watch these videos here, or you're going to watch any video on the main Roensch Capital channel, it's always, risk management is number one. Stay in the game is priority absolute number one. It's never, worth it to allow one trade to knock you out of the game. And the options traders, they can of course be wrong. So manage your risk. If you got value out of that video, please subscribe to the channel. And hey, again, if you'd like to see me continue to cover Apple every single day, please let me know in the comments section. If there's enough interest, I will absolutely be happy to do so. Appreciate you guys, and I'll see you in the next one.